Hey everyone, Bill Bourbonnais here, and I'm here with your Three Things Thursday for this week. Actually, it's Three Things Friday, and if you'll indulge me for a moment, I'll kind of explain why and what's up. So, as you know, we've been going with the theme of Bust Through the BS for August, but this week I'm going to change that up just a little bit. What I've decided to do today is go with some important information. So yesterday here in North Carolina, Tropical Storm Debby dumped a lot of rain, and I think we had over 23 tornado warnings during the time she was here and 5 confirmed tornadoes. So what we'll talk about today for Three Things is 3 things you need to know about disaster losses, also known as casualty losses for your taxes. And in situations like this, if you've got property damage, you might be able to take advantage of that on your tax return. It doesn't fully compensate you for what you've lost, but it does make your tax paying a little bit less, a little bit lower and a little bit more bearable. So we'll just take a break from our regular theme, and if you'll step into my office, I'll tell you 3 things about casualty losses.
Hey, all right, welcome back. Welcome to my office and a little bit of information on 3 things you need to know about disaster losses and how they impact your taxes. So we'll go through this real quickly. If you do need more information, either check out our website or go ahead and give our office a call or send us an email. We'll get some information off to you. But really, for 3 things that you need to know about disaster losses and your taxes, of course, we know that there are disasters of a multitude of types. There's storms, fires, floods, hurricanes, tropical storms, and they all have the propensity to damage or destroy property. If a disaster like that strikes you, the tax law may help you, and there's some parameters that you need to know about that. So 3 things. Number 1 that you need to know is tax treatment of personal losses and business losses are different. It's far easier to deduct business casualty losses than person losses, but the rules for business losses are very complex. Similarly, the rules for personal losses are complex, but they're also far more restrictive than business losses. So you need to keep that in mind, need to identify whether you have a personal loss or a business loss and how to address that. Second thing you need to know about casualty losses is person losses. From 2018 through 2025, which is basically the scope of the Tax Cuts and Jobs Act, unless it's renewed, you can only deduct personal losses due to a federally declared disaster area or if you have any casualty gains. And sometimes you can have casualty gains if you get, for example, a greater reimbursement for a property than what your actual loss was. If you have losses, you have to have insurance against the loss to deduct them as a personal loss. And you have to file a timely claim with your insurance company, even if that insurance claim could result in the cancellation of your policy or an increase in premiums. If you don't file the claim, you cannot deduct your personal casualty loss on your tax return. Other things you need to know about personal losses: you generally can't deduct the first $100 of your loss, and then your loss has to be adjusted by 10% of your adjusted gross income. And then the final hurdle is that you have to itemize your deductions in order to take that loss. The good news is on the timing is if you do have a federally declared disaster, you can claim the loss in the year of the disaster. For example, anybody that had property loss during Tropical Storm Debby could claim that loss on this year's 2024 return, or if they make the election prior to October 15th of this year, you can take that claim to your prior year tax return by amending it, and you might get a quicker refund of all or part of the tax that you paid for that year. The third thing you need to know about casualty losses is the business loss side. So property that could be an office building, a rental property, business vehicle, business furniture, anything that might be damaged or destroyed in a casualty or a disaster could qualify. Car accidents can even qualify as long as they're not caused by willful act or willful negligence. Losses because of theft and vandalism can also qualify under business losses. Unlike a business loss, you don't have to file an insurance claim. You don't have to have insurance coverage to claim that loss. Also, unlike a personal casualty loss or disaster loss, you do not have to be in a federally declared disaster area to claim that loss. Business losses are also not subject to that limitation of $100 and 10% of AGI, and the timing is very similar. You have the option of deducting it in the prior year if you have a federally declared disaster loss. If this is not federally declared disaster loss, then it will be claimed on the current year tax return. You may have a casualty gain if you receive insurance proceeds that exceed your property's adjusted basis. Adjusted basis, for example, for a depreciable property like a building, a vehicle, a rental property, is your original cost minus depreciation. So a casualty gain is taxable, but you can postpone gain on a casualty gain by buying a replacement property within 2 years or 4 years if you're in a disaster area. So that's a really quick summary of disaster losses and how they impact your taxes. Again, if you need more information, we do have a blog article on this, as well as you can reach out to our office if you have a situation that you need to have looked at and addressed. Thank you very much for your time. Three Things Thursday. I apologize for this being on a Friday, but you can see this was very timely and relatable to current situations through the country. I do want to pop up one more thing while I'm thinking about it. We do have a link here. You can go to FEMA.gov if you want to see if you are in a disaster area or if your loss is related to a federal disaster. You can scroll down. There is a bullet point list here of hyperlinks to current ongoing disasters. You can also search by location. So, for example, clicking on this, if I go to search by location, real quickly, I'm not going to try to take too much time on this, but I pop in my business zip code. I do a search for that zip code, and we can see that North Carolina Tropical Storm Debby was declared an emergency federal declared disaster on August 6th. So any losses related to Debby would qualify under the federal disaster losses for either personal or business. Again, if you have other questions, do hop on a call, do send us an email, check out our blog post on this, and we'll get some information to you. Thank you very much. Hope you're staying safe. Have a great day.